I'm Yahoo Finance Executive Editor Brian Sozzi, and you're watching a live shot of the opening bells on Wall Street on this Friday morning. Via Transportation ringing the bell at the New York Stock Exchange to celebrate its IPO. Via is another IPO this week that has priced at the top end of the range, and with the business being valued at about $3.65 billion. Klarna and Figure have also been well-received IPOs this week. Meanwhile, Gemini getting things popping over the NASDAQ, also celebrating its debut today. All right, let's get a quick check on the major averages and what's hot on the Yahoo Finance platform this morning. Brooke DePalma is standing by at the NASDAQ for us in Times Square. Brooke.
Good morning, Brian. Can I just say quickly that this Gemini IPO is one of the loudest cheers here at the NASDAQ that I've heard in quite some time. The enthusiasm is definitely there around this IPO market, and certainly Gemini today. Right now, making your way into the open, we are seeing a bit of a mixed picture here. The NASDAQ up about 0.2%, while the S&P 500 and the Dow moving lower. It's worth noting that all three major indices saw record closes yet again. Just this week, closed on Thursday. We also had the Dow cross 46,000 for the first time. You could see that it's holding on to that momentum ever so slightly this morning, about 46,000, but it's seeing a bit of downward momentum, down about 0.2%. But I also want to take a look at another stock that we watched very closely on Thursday's trading session, and that is Opendoor. The stock surged more than roughly 80% on Thursday, and that was largely because they named a new CEO. They actually hired Shopify's COO for the head role. They also named co-founder Keith Rebois chairman of the board, and really this real estate platform has gotten so much momentum about what it could mean as interest rates lower, mortgage rates hopefully lower, and really that return to the real estate market, especially around AI. But that's not alone. Over the past month, we've seen this risk, or rather past few weeks, we've seen this risk on environment. Investors really willing to take on some riskier investments here, including those return to the meme stocks. And that's where we've seen Krispy Kreme, Kohl's, and even GameStop getting quite a bit of attention here. As you can see, Krispy Kreme and GameStop just up ever so slightly at the open, and Kohl's moving lower, down about 1%. And on top of that, it's not just these game stocks that we heard and know. Now JP Morgan saying that there could be more. In a note on Thursday, they said that as investors are willing to take on some risk on, you could see him and hers, Rocket, SoundHound AI. They said that these stocks are being heavily mentioned on social media, and they have high retail buying as well as high hedge fund shorting. Now, it's worth noting as well that over the past 6 months, these three stocks have really rallied. Him and hers up about 50% in the last 6 months. Rocket Companies and SoundHound up more than 60%. So really, Brian, we're seeing this return to risk on the street this morning.
Yeah, the door being open to some new employees over at Opendoor. Brooke, thanks so much. Appreciate it. All right, here's what I'm tracking on this Friday morning. Fine-tuning your trading playbook. With the Federal Reserve likely to slash interest rates at its next meeting next week, it could have major ramifications for how you put money to work in the markets. Some pros will say rate cuts are already priced into stock valuations, but the reality is nobody can say that with any degree of certainty. We'll dive into what sectors and stocks could be hot should the Fed cut rates, and those sectors and stocks could go ice cold. Amazon charting its own AI path. Amazon is putting billions of dollars to work to ensure it's a major player in the build-out of AI infrastructure in the U.S. I have an exclusive conversation with Amazon AWS CEO Matt Garman about these investments and what lies ahead for this key growth business inside of mighty Amazon. Here on my opening bid roundtable for today, Northwestern Mutual Wealth Management Chief Portfolio Manager for Equities, Matt Stucky, and Yahoo Finance Senior Reporters Brooke DePalma and Inez Ferre. Good morning to you all. Matt, let me come over to you because, of course, I think we're getting ready for all things Federal Reserve next week. Help investors prepare for an event like this. What should they have in their portfolio? What shouldn't they have ahead of a key market-moving event like this?
Well, good morning. Thanks for having me. I think as you look forward to the Fed meeting on the 17th and kind of look at kind of what's likely to happen, which we expect a 25 basis point cut. I think the reason why the Fed is cutting should set some expectations in terms of portfolio construction. And specifically here, you have two sides of the mandate, the employment side, the inflation side, both moving against the Fed's longer run goals. And to me, I think that means the outcomes in terms of the economy over the next 12 to 24 months continue to be pretty fat in the tails. So what that means as a portfolio manager is that you build in some diversification in terms of positions that could do well if the economy reaccelerates, or if, unfortunately, the weakness in employment continues in the coming months. And so, what do you do to facilitate that? on one side, you put in kind of more cyclical positions that are discounted from a valuation perspective that could start to see earnings revisions inflect higher as a result of a steady stream of interest rate cuts from the Federal Reserve. So to me, that's things like U.S. small cap, U.S. mid cap. On the other side, you look to high quality fixed income. And potentially with a little bit more duration in that fixed income portfolio to take advantage of maybe a lower yield curve as the Fed starts to pursue some more cuts.
Matt, let me connect some dots real quick and hang with me here, because if this is going to be the first in a series of rate cuts, is that lighter fluid to this meme stock rally we have seen throughout this summer? It might be easier, or it will be cheaper to borrow to go out and buy some more of these meme stocks, which to me seems like fertile ground for retail investors.
It potentially could be. Those aren't names that we typically traffic in as an institution, but in terms of lowering the cost of risk across the investment universe, an easing cycle from the Federal Reserve, all else being equal, does facilitate a little bit of that. We would say keep it a little bit higher quality, kind of more in the small cap range is probably as low quality as we would go in terms of our positions. But certainly, if you're looking kind of across the risk spectrum, lowering the cost of risk for investors, as long as the economy hangs in there, should be strong for kind of more kind of risky parts of the market.
Inez, over to you. You've been crunching some numbers and looking at how stocks in certain sectors have done after rate cuts.
Yeah, and I took a look after the last September rate cuts for the month following up until October 31st. And this is what I found. I looked at the Mag 7 ETF. That's a proxy for the Magnificent Seven stocks. That was up 10%. I also took a look at gold. That was up 5%. The 10-year Treasury went from 3.72. It went up to 4.28%. So bonds actually went up. And then if you take a look at other assets, you had Bitcoin, which went up 10%. I do want to note what's been fascinating in looking at this is that you saw stocks like the Mag 7 going up, but you saw gold and other assets going up as well. And for this entire year, I mean, you are looking at a one-year chart of gold that is up 44%. Gold last year around this time was about $1,000 less. So that just speaks to the environment where investors are looking at sort of a currency debasement, which is what I've been hearing more and more, and they are going into these assets like gold, like Bitcoin, other assets.
Brooke, also would probably love rate cuts. Some of these home improvement stocks. You and I have been talking about Home Depot, Lowe's for the past year and a half. I mean, the sales have not been as good as they have been in the past, but rate cuts should unlock a lot of homeowners going out there and maybe putting in a new deck. It might just cost less.
Yeah, this is the moment that these home improvement stocks has really been waiting for. When I spoke to Lowe's CEO just a few weeks ago over the phone, he really said that a below 6% mortgage rate would really unlock the housing market. And essentially, consumers and Americans have really been waiting to move out of their existing homes, even though maybe they don't fit in it anymore. They've been waiting to do those larger discretionary home improvement projects because right now it costs high to borrow, but it also costs more to take on maybe higher mortgage rate than their 3% that they locked in years ago. And so really what we're seeing right now is this recent momentum behind home improvement stocks, both Lowe's and Home Depot. In the past month alone, we've seen Lowe's up about 10%. And if you take a closer look, we've also seen Home Depot also move higher in the last month, up about 6% here. And really there's this momentum that we've seen of what exactly this lower mortgage rate environment could mean for these key players and really return them to more higher single digit or rather, higher digit same store sales growth that we haven't seen in quite some time as consumers have really pushed off these projects.
Matt, you heard Inez talk a little bit how the Mag 7 reacted after prior rate cuts. What is your thinking on this key space? We get that one rate cut, get a couple more. Historically, these stocks have done pretty darn well after rate cuts.
Yeah, I think that they've not only done well over rate cuts, they also have done well the last couple of years, and they've really been the only source of positive earnings revisions, ever since the Fed started to hike in 2022. But if you're looking at a change in potential leadership, I would look outside of the Mag 7 because a lower interest rate environment should allow kind of more cyclical parts of the economy, things like housing that we talked about, or manufacturing, to start to grow again, to start to demonstrate some positive earnings revision. That's a catalyst in my mind that's been absent in markets the last couple of years. And if you're looking just at a valuation differential between those areas of the market and the Mag 7, that is quite wide. And so there's a potential there, I think, for a catch-up trade outside of just continued strength from the Mag 7 potentially, but also maybe some other opportunities that investors really haven't favored the last couple of years.
You mentioned small caps. Small caps have been rallying. What's the case for that? I would just counter. We've seen a weakening labor market. Inflation is still high. A lot of these smaller businesses in the U.S., in some respects, are really struggling.
They are, and it really has been a result of the Fed hiking rates in 2022 aggressively. But now we're on the other side of that, and what we've seen, especially if you look at kind of prior periods of history, when we start to see an easing in policy, the smaller companies tend to borrow at a prime rate or a variable rate, and when the cost of financing comes down, they are in a unique position to benefit because they were the ones that have been hurt by it. The Mag 7 hasn't been hurt by this, and so while they're not going to have any difference in terms of their operating environment, the small businesses are. And so we would just look at that as more of a unique catalyst for that specific part of the market, even though it's struggled the last couple of years.
Inez, we have an interview coming up soon with Amazon AWS CEO Matt Garman. It was just a fascinating chat on what they're working, but I feel as though like Amazon is that AI stock that has gotten forgotten about in the talk about OpenAI, NVIDIA, even some AMD. But here's a company with a major stake in Anthropic, and they're also out there building a lot of AI infrastructure in this country, and the street is looking for AWS sales to accelerate in the back half of the year.
Yeah, the street definitely paying attention to AWS. And as you mentioned, I mean, if we take a look at Amazon stock compared to the rest of the Mag 7 for our year-to-date chart, Amazon is up 4%. You've got NVIDIA that's up 31%, Meta and Microsoft up more than 20%. So as you mentioned, it has been one of the laggards of the Mag 7, not as much lagging as Apple, for example, which really needs to get more in the AI space, and that's what the street's expecting for Apple. Apple's down 8% year to date, but nonetheless, Amazon is expected to, with AWS, start to play catch up here.
Matt, last word to you. Is Amazon the type of stock that is in a land or a period of rate cuts, somewhat of a holy grail investment? You have the AWS business potentially accelerating over the next few quarters. You have a retail business that might get a tailwind because rates are lower ahead of the holiday season.
I think Amazon is probably more in the category of secular growth than cyclical growth, but there are components of the business that should benefit from lower rates, and I think retail is one of those. If consumers are able to refi mortgages, as an example, or are paying less in terms of interest as the Fed cuts rate, that does open up some wallet share for some discretionary purchase on Amazon. But I think the real key for Amazon in terms of forward performance is an acceleration in growth in AWS. That's what most investors are looking for.
Enjoying my chat here on the roundtable. Matt Stucky, Inez Ferre, Brooke DePalma. Appreciate it. All right, straight ahead, we'll have my chat with Amazon AWS CEO Matt Garman. To say Amazon is still all in on AI would be a major understatement. We'll be right back. Welcome back to Opening Bid with Chipotle trading at a historically low valuation. Stifel analyst Chris O'Cull says it's time to devour the stock. O'Cull likes how Chipotle has begun to emphasize value in its marketing, which could help improve same-store sales from recent soft levels. Says O'Cull, we are encouraged by Chipotle's recent rollout of the Build Your Own meal designed to generously feed 4 to 6 individuals, or just me, at an attractive price point. We believe the offering has the potential to drive incremental group occasions as customer awareness increases, especially given the company's support of the rollout with prominent national advertising. Note, I just taped an Opening Bid Unfiltered podcast with Chipotle CEO Scott Boatwright. You can listen or watch that on YouTube or on all the major podcast platforms this weekend while you eat your oversized bowl. All right, the great cloud computing growth story of the last decade has been pushed aside by feverish focus on all things AI, but don't sleep on cloud computing growth, as the world was reminded of in a blowout earnings report from Oracle this week. I got the opportunity to catch up with Amazon AWS CEO Matt Garman. We discussed the outlook for cloud computing and how Amazon is participating in AI, which includes its major investment in model builder Anthropic.
It's maybe the fastest moving technology that I've ever seen in the last 20 or 30 years, and but it's also incredibly exciting. And so, look, we're in the very early stages, but there is such enormous promise in the technology. I think that's why you see so much enthusiasm out there, why you see so much investment out there, why you see so many people getting excited at what the potential is for small people, for individuals, and for large organizations. So, but it is very early, and I think as we think about it in AWS, we're still just building the building blocks that we think startups and enterprises and government agencies are really going to want to use to go build both AI applications as well as agentic workflows that they're going to need to really drive the value that we all believe that they'll get out of this new technology. So super exciting for sure. Lots of excitement out there and lots of investment, as you mentioned.
Everyone talks about CapEx investment in AI, and I just feel as though, Matt, it has been boiled down to a chart on various slide decks, and it's like it's up and to the right. Talk to us about those building blocks and Amazon is building, the nitty gritty. What are you putting in the ground in the US to support the future of AI?
Yeah, and I think, people mention CapEx because it's an easy number to get their head around, but it really is how are you enabling all parts of that and delivering innovation to the end customers? Because your end customers don't really care about how much CapEx is on the ground or what you spent. And so when you think about what's involved in that, though, it's involved in building data centers. It's involved in adding power to the grid. There's, and renewable and carbon zero power is equally important there. It's all about actually building that infrastructure, and at AWS, it's not just rolling in kind of commodity racks and doing a commodity hosting job, which I think there are others out there that do that and they do that well. But for us, we want to deliver outsized value to customers. And so what that means is having a whole host of choices that companies can use to go build technologies. And that means, how do you have the very best in GPU technology? How do you have the very best in CPU technology? How do you have the very best in storage capabilities and database capabilities? How do you have custom networking that gives you the scale and the speed and the latency that you need, that's differentiated across all of the different capabilities that you can use? And how do you have the very best in AI capabilities so that when a customer goes and builds an application, they can embed AI as a core part of the thing that they're building? And we think that combination of AI plus an enterprise data is really what's going to give a lot of our customers the value that they're looking for. And so things like Bedrock that we're building, combined with things like S3, where many of our customers keep a lot of their enterprise data, really starts to then turn that flywheel. And then you layer applications on top of that are powered by AI. Take something like Kiro, which is our AI-powered coding IDE. And that is when you really start to see companies just moving faster and faster because they can use AI to go build technologies and capabilities that they can then deploy to AWS and scale globally around the world.
Can you put a number behind how much Amazon is investing in AI infrastructure? What does that look like?
Well, I think this last quarter we invested something like, I think it was $28 billion in infrastructure, and I think we're on pace to continue that investment. I think it's, and really as we think about investment, it's not just what you do this quarter, but it also is what you're planning for 2 to 3 to 5 years out there in the future, to ensure that we have enough data centers, to ensure that we have enough power, to ensure that we have innovative chip technology that can actually go drive the workloads that the future is going to require. So, I think that the CapEx today is important, but the investment in innovation is equally important. And when we talk to customers, that's part of why they choose AWS, is because they are making a bet on the innovation that we're delivering to them, both from a capacity perspective, but also a capability perspective. So it's not just about pure CapEx spend, it's also about if we're building the right differentiable technologies that can actually help people go build. I'll use a simple example, is that, with customers need AI infrastructure in order to scale agentic workflows. But we recently launched something called Agent Core that lets customers actually more easily build those things and not have to worry about actually cobbling together how you actually make this work, but just focus on the innovative application that they're actually going and building. And customers need both of those. So it's not just about the investment, which is very large, but it's also about that innovation that comes with it.
Amazon AWS has partnered with Oracle. Oracle's guidance, their backlog total this week, it shocked investors really all over the world. Having worked with them, were you shocked by what they had to say in terms of backlog? And does Amazon's backlog, does AWS backlog look like that?
Well, I mean, I think, and congrats to Larry and the team. I think it's a great announcement for them. It's largely one customer, so they signed a very large deal with OpenAI and the Stargate kind of conglomerate, and so it's a great deal for them. But I think most of that backlog is all one customer. I would say for us, we're also very interested in, and we think about diversification, which is a super important part of what we go and build. And so we have tens of thousands, if not millions, of customers that are all investing and building on AWS, and we think that's important for our long-term growth as well. And so we have customers that also sign multiple billion-dollar deals, but we have customers that that are just spending $10 today. And for us, those small startups are just as important as the really large deals that we have out there. And so yes, we have some of the large deals like Oracle announced, but we also have that wide breadth of customers, which I think is also equally important.
So I mean, really, you see news like that, and then a lot of folks on the street are looking for AWS sales to accelerate in the back half of the year. Zoom out. I mean, do you get the sense that maybe we're just in the first inning of all things AI, even though it's we're a couple years into this?
I do, and I said this a little bit earlier. I do think that we're very early in this technology. I think this is a technology much like as you think about the internet or cloud computing, where there was innovations all throughout that history for 10, 20, 30 years, and I think AI is going to be similar. And you see the rapid iteration, you see the new technologies coming out, the new applications of the technology coming out, and when you have any technology that's moving at such a rapid rate and has such impact on such a broad range of workflows, that's when you know that you're very early in what's going to be very big. And so I think a lot of this early build out is with the view on what's going to be needed and possible 2, 3, 4, 5 years down the road. And so a lot of this build out is there, computing power that's going to be needed for that. And yeah, I think it's quite early, and we're yet to see, I think, some of the real capabilities and the applications of that. I think today, much of the focus has been on these very large models, the Anthropics of the world and the OpenAIs of the world, which are great and incredible technologies. And I think increasingly going forward, there's going to be more and more focus on how do you actually integrate that into a business, into an application, into a use case.
Before you go, my trading day thought of the day. You will often hear investing pundits wax poetic on whether they think a stock is overvalued or undervalued. In reality, no one really knows if a stock is overvalued or undervalued, except maybe for the insiders running the underlying company. Even they get it wrong too, friends. I offer up this reminder after the surge in Oracle stock this week on earnings and guidance. A case could have been made just prior to that report. Oracle stock was overvalued. But the bottom line is this: if new information presents itself to suggest a stock deserves a higher valuation, even if it trades on a high valuation already, it will adjust to reflect that higher valuation. You're welcome. Coming up, Julie Hyman has you covered from Market Catalyst. She'll dig further into this potential blockbuster Paramount deal for Warner Brothers Discovery and get you even more prepared for next week's Fed meeting. And a programming note: Zscaler founder and CEO Jay Chaudhry will be on my Opening Bid Unfiltered podcast on Monday morning. That will definitely be worth a watch or a listen. Have a great weekend.